Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. I'm here as ever with Tom and Francis. How are you guys doing this week? Tom, how's life?
Life is good. We've had a good week. I think what Francis was saying last week, it's been hot. It's been a bit cooler this week, so I've been pretty happy all in all. Feel a bit warm today, but no, it's been a good week. A lot of good fintech news, and yeah, I think we're feeling good. It's been a good vibes week this week. What about you, Polly?
Yeah, I am doing good, like you say. Really good vibes. It's cooling down a little bit, but still quite summery weather, so that's all good. And just living that fintech high life. Francis, how about you? How are you doing?
Doing very well. So this week I actually came to the countryside a little bit, to Wiltshire, and it's just been lovely enjoying the weather here instead of London. It's just so different. The air feels so much cleaner. It's great. But no, in terms of fintech, we've been sort of gearing up for our next monthly theme next month, which is on financial inclusion. So getting excited about that. But yeah, it's been a good week.
Awesome stuff. So what are you guys going to be talking about this week? What are your articles on? Francis?
So my article today is all about bridging the worlds of fiat currency and stablecoins.
Cool thing. And Tom, how about you?
I am going to be taking a quick look at a new report that reveals how the worlds of crypto and Web3 could add billions in economic value in the UK.
Fantastic. And I'm going to be looking at open banking and the current payment landscape. So Francis, why don't you go first and take it away this week?
Absolutely. So my article today is all about a new partnership between dLocal, the cross-border payments platform, and BVNK, the stablecoin payments infrastructure provider, as dLocal announced that it will now be able to offer faster settlements to its global merchant base. So over 40 markets are set to benefit from the new partnership, as moving money will become much quicker, programmable, and cost-effective. So both dLocal and BVNK are working on expanding corridor coverage and deepening technical integration over the coming months. The new collaboration will also see dLocal offer BVNK fiat payout capabilities through its Layer 1 platform across emerging market corridors in Africa, Asia, and Latin America. So customers will be able to fund cross-border payments using stablecoins and have them delivered to recipients in local currencies seamlessly and at scale. So I wanted to get your guys' views on stablecoins' use in the real world, because I feel like in the past month or so especially, I don't know what it is, but sort of talk around stablecoins has really amped up, in my opinion. It feels like, I know they've been about for years and years, and we've spoken about sort of their development and stuff, but out of nowhere, it seems that they've really become almost like this new buzzword in the industry. So I just wanted to sort of get your guys' views on the partnership and sort of the use case. And, do you think that there is a use case for stablecoins outside of cross-border payments? Tom, I'll come to you first.
I think that was one of the topics that when we went to Money 2020 this year, I really thought like, oh, wow, compared to last year, the stablecoin chat is a lot more lively. Everyone was talking about stablecoins, how they were planning to integrate into their offerings, how in this case could be used for cross-border payments, and just how useful it is. And I think sort of prior to let's say last year, a lot of the talk, at least when we were covering stablecoins, was more for, let's say, countries launching their own stablecoins to be used as a sort of offer it as an alternative to physical cash. And a lot of people were a bit concerned about privacy issues and things like that. When people are talking about potential of Bitcoin coming in, that kind of thing. We saw countries launch their own sort of stable coins like CBDCs in like sort of Nigeria, and we saw some issues regarding that. So I think it's been an area of contention, but I think what we're really seeing now is a real clear move towards stablecoins being a way to facilitate cross-border payments, and a way to really get rid of, or get around, I should say, some of the issues regarding those. Obviously, they're very complex, and I think stablecoins seem like currently the best sort of technological way to get around those issues and to ensure that it's actually possible to do that seamlessly and efficiently, which is obviously one of the things that's been really difficult to achieve, since we've been covering the fintech sector, really.
No, I definitely agree. I think it's 100% a really good use case for it in the cross border payment market. I don't think, the idea of using stablecoins as an alternative to physical currency has really taken off as much as some people might have initially thought. I know that there are some use cases where, the whole idea of crypto even is really, really popular. But no, I think, yeah, for the time being, it will be really interesting to see how impactful stablecoins can be in the cross-border payment market. But I do remember an article um, that we published, sort of discussing the potential of interoperable payment networks that are already established, and if we sort of see them interoperability between countries as opposed to sort of just within a nation, sort of going cross border with these payment rails that are already existing, will that sort of make stablecoins' use case in the cross border sector a little bit obsolete and almost like a third party interaction? So I think for the time being, I think it's a great thing, but it will be interesting to see sort of how that develops as sort of like I say, this interoperability of existing payment networks continues to develop as well. But yeah, Polly, what do you think?
I think it's really interesting, and I echo what you guys said at the start about how like stable coins seem to have like popped up everywhere, and suddenly it seemed to be like the latest big thing. There was like I don't know if any of you guys saw, but there was a really passionate article in the Financial Times literally yesterday, and it was like, "Oh, stable coins, the future of money," and the answer to that question for them was no. And I find it really funny. Not funny, but you know what I mean, really interesting. And I think it's really strange how we're seeing them pop up. I think the natural use case for them has so far been for these cross-border payments. I think it's really interesting that we're getting a lot more sort of uptake of that, especially with this sort of like collaboration between dLocal and BVNK, kind of bridging that gap and using them to offer faster, better payments cross-border. I do wonder what other aspects of sort of stable coins that we might see cropping up. I think there is use cases for them elsewhere in just the general sort of landscape and the general payments industry, and maybe even beyond that. I guess I think I guess stable coins were always supposed to be kind of the counterpart to your traditional cryptocurrency, but counterpart in a way that is safer and a bit easier to use. So yeah, I think people are still figuring out stablecoins, and I think that's a really fair way to put it. I think us as an industry, and you guys feel free to disagree with me, but I feel like we're still figuring out what to do with this concept. We figured out that they can work really well for cross-border payments, and we're like, yeah, let's go into that. But then beyond that, I think there's still kind of this question mark around stablecoins, what we can do with them, how they can best be used. And I think there's still different governments like testing out their own stable coins. Some of them aren't necessarily going super well in terms of the uptake. Some of them are still in development. So I think it is, I don't know, we say this a lot, but it is one of those kind of like, let's wait and see moments to see kind of where we go and what the industry is thinking about doing. But I do wonder whether, obviously we've got a lot of buzz at the moment, but whether, in a couple of months' time that buzz will die down and it'll kind of go back to sort of stable coins on the back burner, which I think it's fair to say they have been on the back burner. Still around, still ticking away, but, pushed aside in favor of more exciting things in fintech. So yeah, it's really interesting, and it'll be really interesting to see how it moves forward.
Yeah, definitely. And I am intrigued what the next use case will be, because like you sort of said, and we've discussed, that the obvious use case right now is cross-border payments. But I think once we do see these sort of new innovations coming in, sort of how they can benefit from stablecoins, and I think that will really help sort of guide the next sort of development phase or stage of the digital currencies. But yeah, no, I think it's definitely a good area to keep an eye on. But with that, why don't we go to your article, Tom?
Yes, indeed. So just to sort of give a quick recap, I'm looking at a new report from the Startup Coalition, which was formerly known as the Coalition for a Digital Economy, or CODEC. And basically this new report, which is called The Economic Potential of Decentralization, has revealed that by 2035, the UK could see £40 billion of economic value from the crypto and Web3 world. And the reason I found this quite interesting is because the report basically lists the growing uses of stablecoins, which is obviously something that we've been talking about just now, as well as distributed ledger technology based user generated content and the cross section of blockchain and AI, which could be also key drivers of this huge crypto driven growth. And obviously, we're in a time now in the UK where the Financial Conduct Authority has started working on a crypto and Web3 regulation. However, firm policy papers aren't expected until 2026 at the earliest. And as a result of this, the Startup Coalition is basically saying that it believes that the current lack of a strong, concrete, decentralized government regime is disincentivizing startups that want to get involved in the UK sector, but because of this sort of lack of regulation, it's making it more likely that they're going to have to go and establish themselves in the US, because that's where there are stronger regulatory regimes for crypto assets. Now, in order for the UK to keep up, the Startup Coalition has basically made a list of changes that it thinks is going to help unlock this £40 billion potential, including establishing a clear framework for measuring decentralization to ensure that protocols meet rigorous standards before being classified as decentralized. And the reason that I think this sort of caught my eye and I wanted to bring it to the table today is because also something that happened today on the day of recording, which is Friday, and it's that the UK bank Barclays has said that from today it's blocking all crypto transactions made with a Barclaycard credit card due to certain risks with purchasing cryptocurrencies. It says, because of the potential of crypto assets to fall in price really quickly because they're so volatile, it could lead to customers finding themselves in debt that they can't afford to repay. And because there's no protection for crypto assets if something goes wrong, because they're not covered by the Financial Ombudsman Service or the Financial Services Compensation Scheme, it's basically just saying it's too risky, so we're just not going to allow our customers to buy a crypto using our Barclaycard credit cards. And I sort of thought, while they're not directly linked, obviously they're linked quite tenuously through crypto. I was just kind of got me thinking of, obviously this report says that crypto promises so much potential in the UK and could be this driver of huge economic growth. And yet there's a clear divide between how, this kind of suggests it should be approached. But then there's banks like Barclays who are just blocking it altogether. They don't think people should be getting involved in crypto while these sort of regulations don't exist. So I wanted to get your take, guys, on what you really think about the crypto sort of environment in the UK and how you think it should be approached. Do you think it's just a case of we need this regulation, we need better protections regarding cryptocurrency so that these banks can enable it? Or do you think there's an element of, these banks, I say these banks, Barclays specifically, should be given users more choice? I think everyone knows now that crypto is volatile. That's why they get involved with it in the first place, is because they think it could potentially be a good investment. I think most people do understand the risks. So should they be giving people more choice? I just want to get your guys' take on really the whole thing and what is the right approach in your opinion? Francis, I'll come to you first.
I think it's really sort of an appropriate article given sort of the Barclays announcement and stuff. But I think crypto's been around for so long now that it almost seems a bit surprising that we're still seeing consumers treat it in an irresponsible way of not really being aware of the risks associated with it. And I know you've just said that most people know that it is extremely volatile and that, their money is at risk, but that is why people do it, in the hopes of getting rich quick. But I feel like the Barclays approach sort of indicates the opposite, in that, there's probably been so many people complaining, saying, oh, I've lost all this money, and, there wasn't anything in place as a sort of a preventative measure. And it doesn't, I don't know, for me, that just doesn't sit right in the way that, because there's so much information out there now sort of about the risks of crypto, and, it isn't a get rich quick. And I think people sort of claiming, oh, well, I didn't know, it is a bit, it's on the consumers or the fault is with the consumer, I think, at that point. But saying that, I don't think Barclays' approach is correct either. I don't think completely blocking any crypto payments is the way forward, because that completely would incentivize anyone who does understand the risks associated with crypto, who does use it responsibly, who doesn't sort of treat it like a gambling thing. Because I think at the end of the day, that is what a lot of people see it as, is gambling. It's almost like going and sort of just saying, right, well, I'm putting all this money on red and hoping for the best. That's almost what it feels like some people treat or have the view of crypto. But I think Barclays sort of saying, we're not going to sort of endorse any of this. And if you want to do some crypto purchases, it can't be with us. I don't think that's the right way to do it. And I think, if anything, that could be quite harmful and lose the consumers in the long run, because crypto isn't going anywhere. And as the article says, sort of the growth of blockchain and AI and the two technologies working together is only going to continue to grow. And I think in the future, we are going to sort of see more sort of digital assets and digital currencies sort of take the main stage. So I think sort of taking this approach that Barclays has just isn't the right way to do it, in my opinion.
Yeah, I think I agree, and I definitely can see the argument of people saying that the bank is there to facilitate transactions and secure funds, and that's kind of where their responsibility should lie, and that's where they should also stop. I think there's a real kind of feeling, I guess, that consumers are probably thinking, well, surely that's my decision to make. I've got the freedoms. It's also sort of their decision to decide what investments people are aware that when you spend money on a credit card, that has to be repaid, so they know that that's something that is difficult to get involved in. I do wonder what kind of has driven the move. Barclays didn't say what is the main reason they've decided to do this now. What's caused them to do this. You'd have to think that, like you were saying, it's probably a situation where people are actually saying, like, I've lost this money, I can't repay it now. People are getting into debt quite considerably through purchasing cryptos using these credit cards. So I think it's a really kind of odd time. It does feel like odd timing, because, as you said, crypto does seem to really be getting a bit of a limelight on it again, or a bit of a spotlight, I should say. People are really kind of talking about the potential of crypto, as this report is, as well as just the different use cases for it. And I think there's kind of at a point now where there's a lot of understanding, maybe not necessarily behind the technology behind crypto, but definitely behind the risks and the volatility associated with it. So yeah, I think it's a weird one. But Polly, I'm keen to get your take on this as well, and whether you think this is a good move or a bit of an odd one.
Yeah, maybe controversially, I do disagree with you, Francis. I actually think the move from Barclays is a good thing. So I know we all know that I'm like not anti-crypto, but I'm of all of us on the podcast, I'm the one who just does not get crypto and has never managed to get it. And I think banks do have a duty of care to their customers to do their bit to protect people from almost themselves, like spiraling into debt, like offering big credit limits that they can't pay back. Banks shouldn't be doing that. Offering loans that people can't pay back. There is, I think, a duty of care on the affordability front from banks. And I think banning crypto on credit cards, yeah, I'm about that. I agree with that, because you shouldn't be able to buy crypto on a credit card, because I think the way I'm kind of seeing it, based on what you guys were just saying, like, yes, if you want to get in crypto, invest in crypto, and do all that, you should absolutely have the choice to do that. But if you bought it on a credit card, in this case Barclays credit card, that's not technically your money. That's not money that is yours. And like, it kind of is, because it's like a credit, it's a loan and stuff like that, but that isn't money that is technically yours. That is money that you're going to have to pay back, and that is money that you're going to have to pay back with interest, unless you've got an offer on or something like that. So I think not being able to buy crypto from credit cards, I think, is a good thing, because yeah, crypto is volatile and you might not make your money back, you might lose all your money. And having crypto on a credit card, to me, it feels nuts. So I'm actually on board with that from Barclays. I do agree that people should be able to make their own choices. People should be able to do what they want to do, and if they want to invest in crypto, they should absolutely do that. And I think you're right on that front, in that obviously, crypto is somewhat of a future. There's so much potential for crypto, but I think until we have that regulation in place, I think that's going to be the turning point. Until then, until we kind of know what we're doing, until the banks know what they're doing, until the different players in the game know what's going on in terms of the regulation, I think it's actually really wise for Barclays to do this. And I wonder if we'll see some more banks following suit as well, now that kind of Barclays have been the first one to take the plunge. I don't deny that crypto has value. I don't deny that crypto is the future, and there's crypto is here to stay, and I think it will be useful to the economy, as obviously we've seen in the research. But I think until we get to the point where A, there's regulation, and B, people actually get it. Because I know you guys were saying, crypto's been around for ages, people know how volatile it is, but I still think there's a massive gap in education. And this is coming from someone who, I don't get crypto, and I hold my hands up to the fact that I have no idea about it. And I'm a fintech journalist, so you'd think out of everyone I'd at least have some inkling of crypto, and yet I'm still pretty not great about it. So yeah, how can the average sort of jokey public know if I don't even know? And yeah, I think I don't want to waffle on anymore, because I've kind of said what I wanted to say, but I do think there's still a big gap in crypto knowledge, crypto education, then obviously crypto regulation as well. And I think until we reach that point where that is lowered and we're kind of all on the same page, I think people should be doing things to educate themselves, and in this case banks should be doing things to help educate and or protect their customers, because buying crypto on a credit card is crazy to me. So no, people should not be able to do that. But yeah, that's all I'll say for now.
I think you make some really good points, and I think it's what makes this topic really interesting, is because there's so many people that actually are kind of disagreeing about this. I mean, we've obviously reached out to different people in the industry to get their takes on it, and one thing that I've seen pretty early on from getting these responses is just there is a clear divide. People are either, yes, this is the right way to go about it, this is a too risky investment, consumers need to be protected, and then there's some that are this is an outrage, cannot believe that consumers aren't being given the choice, and I think it's quite interesting to see. I think from someone who can definitely see both points of view, I think it's a really interesting kind of area to be looking at. And obviously, I think in the past some banks have already kind of put restrictions on. I don't think there's been any blanket bans, although I could be wrong. But I think Nationwide had a limit. I think Santander had a £3,000 limit a month on payments to crypto exchanges, and I think you could argue that could be heightened as a limit or lowered. So I think there's a lot of things to consider when it comes to crypto, especially using credit cards.
Sorry to interrupt you, Tom, but I've just had a thought in that I know it's not the same, but you're not allowed to pay for gambling sites on credit cards. I'm pretty sure that came into law in 2020 or something like that. So you can't use credit cards for gambling. So is that the same? Is it different? I don't know. I'll leave it there. Sorry to interrupt.
I think some people would definitely argue crypto is just as much gambling as blackjack. But again, I'm sure there'll be plenty of people that also heinously disagree with that. And I think that's a good place to leave it, actually, because obviously there are a lot of different takes on it. And obviously, if you've got a take one way or the other, please get in touch with the Fintech Times, because we love to hear all of the industry takes and really find out how these kind of decisions impact the industry. But with that, why don't we move over to your article, Polly?
Absolutely. So moving away from crypto, but staying in that payments area, for a loose segue. So Yapily, the open banking infrastructure provider, has published new research finding what merchants and shoppers view as the most important factors when offering or choosing a new payment method. So essentially, one of the biggest concerns for merchants lies in the chargeback space, which is dubbed as unfair, and 41% have shared that they wish the process was scrapped entirely, but 49% that they wished it was more efficient. So as well as chargebacks, merchant data shows that cost and security are also big deal breakers when it comes to new payment methods. Almost all of those surveyed, which is 98%, cited low fees as being a really important factor when choosing a new payment method, followed closely by how secure it is. Same with sort of 77% saying transaction fees were an important factor as well as a concern. And this kind of all really correlates with the fact that 40% of the respondents said that they would be open to offering open banking as a payment method which comes with low fees and high security as standard, and really highlighting their dissatisfaction with the selection of payment methods on offer like debit and credit cards. And I thought this was really interesting for a few reasons. Number one, like, I think, open banking has been around for a while. We all know open banking. We all love open banking. I think maybe that's a sweeping statement, but open banking is pretty great. And I just find it really interesting that we're still having conversations like this where it's a case of, we have a problem and open banking could solve that problem, but we're kind of not implementing it. We're not kind of having that final push to utilize open banking for the kind of good stuff that it does. And I think surveys and articles like this really intrigue me, because obviously there's that appetite there of 40% of merchants saying that they'd be open to offering open banking, and yet they're not. Why are they not offering open banking? What is the disconnect here? And I think it's really interesting. And I think the fact that businesses want lower costs, they want better security, that is kind of what open banking is set up to do. But we still have challenges, and I guess the challenges, as the VP of Product Strategy, Innovation and Policy at Yapily is saying in a quote, Nicole Green, the challenge is finding the tipping point that drives behavioural change among consumers, encouraging them to make the switch at the checkout. And I genuinely found that so interesting, because I think we talk a lot about consumer behavior and consumer loyalty and how that is the most important driver for things like payments. And this survey kind of really shows that in complete, that is absolutely true. And if we want to make the changes using open banking for all the goodness that it is, we need to figure out how to get consumers to use it, and that is the biggest challenge of them all. And I guess I guess I wanted to talk about this on the pod today because we talked about open banking before, really popular thing, but I really wanted to get your guys' view on like how can we make this change. Obviously, like Yapily is calling for their own change, given a series of recommendations onto how we can really boost the open banking ecosystem and really drive open banking adoption. But I'd love to know what you guys think. Like, what is going to be the big driver for open banking? Or is it just one of those things where open banking is kind of always just going to be there ticking along in the background, but there's always going to be a bit of a challenge because of just what it is, and it's something new, and people are just used to doing the things that they're doing. So, I mean, Tom, what do you think about this? Where is your stance on the whole open banking malarkey?
I think when it comes to open banking payments, I feel like there's an argument to be said that it kind of has to be led by the merchants. I think if merchants are the ones saying we realize that there's a real benefit to both consumers and merchants in introducing these, then it kind of falls on them to implement these. I think there's plenty of firms, open banking firms, that are sort of enabling these types of transactions through open banking, through say Pay by Bank, that are already available. So I think there's a real need that I think merchants need to be the ones to kind of take that step and actually recognize that they need to be the ones that implement it. I think it's Ryanair's live with Pay by Bank in like 7 different markets in Europe, and it uses like homepage banners to educate its customers about the pay method, to make them aware that it's a possibility, and to try and quickly share with them the benefits of doing so. And I think that is kind of the approach that to me makes a lot of sense. I think showing people what it is at the point of checkout or on the website where they're most likely to make a checkout is such a good way to increase awareness, because as much as we can talk about on the podcast, I think for the wider consumers, there isn't really a space that people can naturally come across open banking payments and go, oh, open banking payments sound really good. Whenever I see them, I'm going to use them. I think they have to the only place that they're going to see them is at the point of checkout. And I think that's where they need to be kind of shown how to use it and the benefits of using it. Obviously, there are still some, as the article says, some areas around consumer protections that still need to be kind of considered when it comes to open banking payments. But I think we've kind of seen in other markets that there's like quite a lot of appetite for definitely like pay by bank. And we've seen that in the UK a little bit as well. And I think I've been a bit surprised that it's not been quite so rapidly implemented across, say, like a lot of big brands. There are some big brands that have implemented it and kind of gone a little bit of a way into kind of educating consumers about it. But I think there needs to be a much greater push from a wider range of merchants to actually make it a payment method that people think of when they make payments, and think that that's going to be my go-to, because I think there are so many benefits that it offers. And I think if they can get those kind of final protections and regulations around it ironed out to a point where consumers are happy and merchants are happy, which is obviously a lot easier said than done, I think there's some clear appetite for these types of payments. And I think it could be a really interesting space to go into in the future, because I think it could offer a lot of benefits to everyone. And, you know, as a consumer, I think it's the type of thing that hopefully we're going to see more of, because as I said, there's just a lot of positives, and so far we haven't seen many negatives associated with open banking payments.
Yeah, I think you're absolutely right. I think people need to just know what it is, I think, to start. And I've always kind of thought that I think open banking needs a rebrand. And I think what's putting people off is the word open. And you kind of hear that and you think, oh, I don't want to open my bank account. What? No, they don't want to do that. But actually, people need to understand what it is and like how they can use it. And yeah, to just bring it into their everyday life. But I mean, like, Francis, what do you think? Where do you stand on open banking?
I think that's a really good point about sort of the rebrand, because I think you're right. I think if you say to someone open banking, it almost sounds like, right, well, I've got no security in place at all, because I'm just, open my bank account, anyone can access it and anyone can take money out of it. And I think that definitely does put consumers off. But I actually disagree with Tom a little bit, because I think banks are the ones that need to encourage open banking more rather than the merchants, because at the point of checkout, I think consumers just want to pay. I don't think at that point you're really looking to experiment with a new payment option, because I think the amount of cart abandonment that we've studied at the Fintech Times and sort of articles that we've seen and worked on, where it will write about like a failed payment transaction, or something taking too long, and then people just abandon the cart and go shop somewhere else. And I think as a merchant, you don't want to risk that. You just want to complete the transaction as quickly and securely as possible. And I think to do that, you use payment methods that people are already used to. So then that brings it on to the banks and what they can do to really encourage people to use open banking and sort of see the benefits of it. But I think it's one of those things that, as the article says, is consumers only really want two things, and that's simplicity and security. And open banking does offer that, but I think it almost seems too good to be true. And I think, everyone always learns growing up, if it's too good to be true, it probably is. So I think there's definitely like a hesitancy there to sort of experiment and sort of see, okay, well, how does this work? And I think that's another thing. It's just trying to actually figure out how it works and the security measures that are in place. And, people want to understand what they're doing, especially when it comes to payments. They want to understand why their payments and sort of finances are safe. And like you say, with a name like open banking, it doesn't inspire confidence. So yeah, actually, I really do agree with that idea of a rebrand. I think that's a really good takeaway from the article.
Everything in life comes down to marketing. And so, yeah, you heard it here first. Open banking needs a rebrand, a new campaign. Well, I don't know what you'd call it. Closed banking doesn't have quite the same ring to it. But yeah, you heard it here first. Marketing.
The really fast and secure banking method.
Yeah, secure banking. Or, you know what I mean? There's got to be something in that, surely, because I completely agree with what you said. If it's too good to be true, it probably is. And I guess that's what open banking is to a lot of people. But anyway, let's leave that there for now. Thank you so much, guys, for joining me in discussion today and bringing your lovely articles. If you want to hear anything more about anything we talked about today, head on over to thefintechtimes.com, where there's plenty more news and insights over there. And very quickly, let's move on to what I learned this week. So each week we're learning so much new stuff, being on the Fintech Times editorial team, that we thought it'd be fun to share that with our listeners. So, Tom, what have you learned this week?
This week, some new research caught my eye by Press Ganey Forster, which revealed a growing generational divide in the financial services sector, finding that only 59% of 18 to 24-year-olds trust financial service providers with their personal data, which is the lowest of any age group surveyed, compared to 81% of the over 65s.
Cool. And Francis, what have you learned this week?
So, as I mentioned in preparing for our Financial Inclusion Month in July, I actually found out that according to the World Bank, the number of adults without access to financial services has dropped from 2.5 billion in 2011 to 1.4 billion in 2021. And while that is 4 years ago, I'd like to imagine that it has continued to drop. And I thought it was just a really impressive stat.
Fantastic. And what have I learned this week? I learned that according to TransUnion, 27% of US consumers are now pessimistic about their household finances over the next 12 months, which is, not ideal. But anyway, guys, thank you so much for joining me this week. As always, it has been a pleasure to talk about fintech with you. And yeah, I will catch you on the next one.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.